Hi, my name is Khleif, and I'm the host of the Lifetime Cash Flow Through Real Estate Investing podcast. And every week I interview multifamily rock stars, and we talk about how they've built incredible wealth for themselves and their families through multifamily properties. So hit the like and subscribe buttons to get notified every Monday when a new episode comes out. Let's get to it. Welcome to another edition of Lifetime Cash Flow. I'm Khleif, and I am thrilled you're here. And you're going to get a ton of value from the gentleman I'm interviewing today. His name's Terry Judge. And he's the founder and CEO of Core Solutions Group. And Core Solutions does cost segregation studies, which is not the most exciting topic in the world, but we're going to make it as exciting as we can. And we're going to talk about quite a few other things as well. So we're going to have some fun today. Welcome to the show, brother.
Man, great to be here, Rod.
Yeah. So why don't we start with having you talk a little bit about your journey and, why you got into cost seg. I mean, I know, but, from reading your bio, but why don't you just share a little of your story and bring us kind of to current?
Yeah. Well, the college route really wasn't, my thing. And so I started as a young 19, 20-year-old got started my own business, was doing a lawn care business, got into direct selling, kind of learned I was going for engineering, and then I just that was not me. And,
I saw that on your bio, and I assume that had something to do with this current path. But
we'll get there. I have a crazy brain.
Okay.
Analytical meets entrepreneurial brain, but so went down that journey. In my 20s, through this company that I started, I actually experienced some pretty amazing success for a young guy, and had the boats and the wave runners and the Corvettes and it came a little too quick. Didn't really have good mentorship around me. Got a little crazy, got a little stupid, started spending the money. Didn't really have a mentor to help me channel that money into other things, productive. So I found myself pretty much my 20s went by like this. Found myself somewhat dead broke around 30. And I'm like, oh my God. I mean, so kind of it was in that reinventing stage. I got into, I started another business, got into some utility marketing as far as telecom and gas and energy in Michigan. I'm from born and raised in Detroit. So that's kind of how I started to get into then one thing led to the other, kind of started having some success, started kind of, getting my head back on straight.
So success selling the utility services?
Yeah,
okay.
So I kind of found another pathway.
Okay.
So, make a long story short there, the state of Michigan underegulated deregulation of electricity. And I put all my, no pun intended, energy into that basket, and then it just stopped. The lobbyists came in, shut us down. And I'm just like, okay, well, that sucks.
Right.
So at that point, that was probably, I did that for about 3 to 4 years. Then somebody sent me something on cost segregation. And at that time, I had no CPA accounting background. Was not an attorney by training. I did have a little engineering experience going to college. And for some reason, Rod, I just thought that was so intriguing to me. I don't know why, but I immediately called my CPA and said, what do you know about this tactic? What do you know about this strategy? He said, well, I was at a seminar. There was a guy on stage, talking about this very topic. I said, is it legal? And why don't you offer it? And then it just got complicated. But as I was still kind of in the energy business, winding out, something right behind. So when I started looking at cost segregation, I didn't really at that point think I was going to start this company. But there was another program in the tax code called 179D, and that was for energy efficiency. And that was for any building owners, property owners, putting in LED lighting, high energy efficiency HVAC.
Was this a federal program?
It's still in existence.
Okay.
So that triggered me. I said, wow, I'm in line with this energy program. So I started digging into this. It's a federal deduction program where building owners can get multifamily.
On new construction?
New construction and existing.
Really? Okay.
You can get up to $1.80 a square foot in the form of this tax incentive for going. So I'm already in the space of marketing LED lighting and all this stuff. And then right behind that, cost segregation kind of hit me, and that was I had the aha moment that I want to start this boutique company that nobody.
When was this, by the way?
This was 2006.
Oh wow, that long ago.
2006, 2007. So I've been at this for 17 years.
Okay.
And so I said, I'm going to start this tax advisory company. Okay. I already had clients, so the only thing I didn't have was a CPA network.
Gotcha.
So I reached out to a couple CPAs that I respected in town in Birmingham, Michigan, and one gentleman was a big CPA, and he's like, "This is exactly what I'm looking for. I've got clients. I need to meet with you right away." I had no PowerPoint. I had nothing. I didn't understand the laws yet, so I had to ramp up very quickly. So I ended up getting a car dealership owner. To his brother died. He was inheriting the business. He was inheriting the buildings. The CPA brings me to this meeting. I do my little pitch. The CPA actually knew more about it at that time than I did, and the client basically looked at me and said, "How much do you charge?" And I literally, I had no clue.
Wow.
I just made up a number.
Wow.
And he goes, "Well, what do I owe you today?" I go, "Just half." It's like I just blurted out $10,000. It just sounded like a good number to start. That launched my company. That
So you did a cost seg on a car dealership.
2 buildings right out
Two
of
buildings.
the gate.
Gotcha. Okay.
And that was my first check. I still have a copy of it. And at then fast forward, I said, I think I got something here. I think this is marketable. I think there's a huge gap.
Hold on before you move past that. So how did you satisfy that sale?
Oh my
God.
God.
What did you do to do that cost seg? Because you really didn't have any experience. Did you hire an engineer?
Well,
did you do it yourself? I mean, what did you do?
I started Googling.
Okay. You became a Google expert.
I needed to find like a CPA / engineer because it was now game on. I literally cold called a guy from the old Arthur Anderson days, and Arthur Anderson was just going down. This guy was one of their top guys in the valuation. He was from West.
There were a lot of people lost their jobs back then, so the good people were available, right?
The timing was great.
Right.
Him and I ended up partnering. I didn't actually meet him physically for about 6 months, and I told him, this is what I'm going to do, and you're going to fly in. I'm going to put together an event basically I had 30 CPAs show up. He came in, kind of did the.
So you were doing presentation to CPAs.
That's how I started.
Okay,
I
interesting.
pivoted since.
Before we go any further, I'm sure there are people wondering what the hell a cost seg is. So maybe we should stop for a second and talk about that. Otherwise you're going to lose interest and we're going to lose people. So guys, in every building, there are lots of different components. There's the windows, there's the doors, there's the carpet, there's the roof tile, there's the roofing material, there's the lumber, there's the drywall, there's the appliances, fixtures, and every one of those has a different remaining life, correct?
Correct.
Okay, You stop me if I screw this up because I'm not going to profess to be an expert. But every one of those items has a different remaining life, and the IRS allows you to accelerate depreciation by carefully documenting the remaining life on all of the different components in a building. So you got to break down the building to its parts.
Yeah.
And then you create it's an engineer. You're basically have an engineering firm, for lack of a better way to describe it, right?
Yeah. So we do basically it's a forensic study,
right?
And the interior, just consider it all 5-year property.
Okay.
In the cost segregation rules.
Okay.
And exterior, land improvement, swimming pools, sidewalks, curbs, drainage, fencing.
Right.
All that stuff is considered 15-year property.
Okay.
Okay, and that just, so instead of waiting, why would you let the IRS hold on to that money for 27 and a half years when you can get it and put it in your pocket in today's dollars, creating that beautiful time value of money?
Right. And so you're able to write it off the first few years, and it's extraordinary. I mean, I know that typically when we bring investors in as passive investors in one of our syndications, I mean, we get anywhere from 50 to 70% in the first year depreciation on whatever amount they put in. I mean, it's extraordinary.
Yeah.
As a write-off. Did I describe that correctly?
Yeah,
okay. Yeah. And so any seasoned good operator is going to be doing a cost seg on their asset, year one. We just finished one. You just did one for us on our Nashville asset, and I forgot where we came in, but it was pretty exciting.
Yeah, over 9.4 million, I think.
9.4 million in first year depreciation.
Yeah, and the beautiful thing is, you get it all in year one.
Right.
But if you can't use it all, it has a 20-year carry forward.
Okay.
As well.
Okay. So whatever you use, you push forward.
You just push it forward.
Yeah, that's beautiful. Okay, so you don't. So the cost seg is all in 1 year. Then is the way it works.
Yeah. Well,
okay.
Right now, yeah. So right now we're in this world of 100% bonus depreciation.
Right. Well, we're past 100 now. We're at 80.
Well,
correct?
we're still in 100 because we're still doing people's tax cost seg studies that for 2022.
Gotcha.
purchases.
So just so you understand what he's talking about, the IRS allowed bonus depreciation, and last year it was 100% in 2022, and it's diminishing every year. And this year it's 80%. So you're finishing up some of the stuff from last year that's still at 100%. Well, so guys, you're able to do that incredible first year write-off. And that's I actually had some confusion around this myself. I wasn't aware that was just a one-year thing, but whatever you didn't use, you carry forward is where I got the additional hit. And so, I let there's some things I don't know very well, and taxes is one of them. But okay, so what else? Is there anything else to add to this cost seg conversation?
Well, people always say, well, they're freaking out because they think that once bonus, once it resets in 2026, does cost segregation go away? And the answer to that is no. It's just scaling down. And
could you explain bonus depreciation? Because I can't even explain it well.
So bonus depreciation, again, in the normal cost segregation world, we're going to go in and we're going to dissect the building. We're going to put everything in a 5-year or 15-year bucket, right? So it's going to be 1 through 5 on all of your interior. And then it's going to be 1 through 15 spread out over the course of for all your land improvement costs.
Okay.
Now we're able to take the 15-year becomes 1 year, the 5-year becomes 1 year, and everything gets compressed into that first year of ownership.
Okay.
And it creates this enormous benefit. So, and then for real estate professionals that now can use this huge amount of depreciation, they can use it to offset other income.
Right.
They can put it against capital gains if they exited a property. So it becomes like this lever that has so much flexibility.
But the bonus, what's the bonus piece?
So the bonus again, it's you get 100% all the way. That was crazy. 2022.
So 100% of what?
100% of the available depreciation. So if let's say you buy a building for $1 million, let's say we buy a building for $1 million.
Okay.
And let's just call it 1.2. We back it out, so the basis is 1 million.
Okay.
So let's just say we find 35% in accelerated depreciation through a cost seg.
Okay.
That's going to generate about $350,000, right? So that $350,000 is now available to the investor, all in one chunk.
So that's what bonus depreciation means. It means that you can use 100% of it. So in this year, you'll be able to use 80% of it.
Yeah, and so, but the other 20 still gets spread out over the 5 and 15.
Oh,
so
it does. It doesn't go away.
It does not go away.
Gotcha.
It just gets reset and spread back out.
Gotcha.
So you just got to wait for the other 20. You're going to get
over time.
Over time.
Okay.
Yeah.
Okay. All right. Well, that educated me actually, because I didn't fully understand it. Yeah,
no,
I appreciate it.
Yeah,
and I should know that. It's a little embarrassing that I don't. But so is there anything else about cost seg that? I mean, it's pretty straightforward. Is there anything else about it that?
Here's something that, because cost segs are not all created equal. It's very important when someone buys a building, they're going to start renovating it, to get, whether they hire my firm or someone else's firm, to get the engineers out there before the renovations and the CapEx projects start happening. Because we identify what's going to be removed, and there's something called disposition or asset disposition study. So we will monetize the actual components that are being thrown in the dumpster.
I see.
And that'll give us another, 1.5 to 2x in depreciation, because we're gonna be able to put some values on those assets, even though they're going to be thrown in the dumpster.
So do the cost seg before you start doing CapEx. Got it. Okay.
Yeah.
Okay.
That's important.
Yeah. No question. You mentioned something I want to circle back to for a second. You were in, and this is a little off topic, but not really. You mentioned basically going out of business because the government changed some regulations. And, there are a lot of businesses that are at risk at that, like short-term rentals, for example, and the regs where they don't allow them and things of that nature. And so, one of the beautiful things about multifamily is it's kind of hard to screw it up, honestly. It's kind of hard for the government to come in and mess with too much. And, as an asset class, multifamily is the only one that got help in COVID. I mean, we got hundreds of thousands of dollars worth of rent relief money when COVID hit, and none of the other asset classes got it. Retail didn't get it. Office is dying right now. Warehouse didn't get it. So, it really is a solid asset class. And let's shift for a minute to investing as a passive investor, because I know you're a passive investor in about 800. Well, actually, let's have you finish your story. Forgive me, I forgot. I cut you off in the middle. Finish your story, and then we'll move into passive investing.
My journey?
Yeah, your journey, because I cut you off. I apologize.
Oh, it's okay.
Yeah.
So we ended up, it was a fast track once I got in alignment, and I really realized I was going to put together a cost segregation study. So segregation study company. ended up partnering with this guy from Arthur Anderson.
Right.
He was kind of my back office. He knew how to put together the engineering studies, and we ended up just crushing it that first 12 months.
Wow.
I think we did over $1 million our first year. And I just saw that, there was just a massive need. So since then, we've tried to say, most of our clientele are seasoned multifamily operators. That's where we really provide our biggest value. So we wanted to add other services. So we're not just a cost seg firm. If cost seg ever got yanked, we didn't want to put our pants down.
Sure, for that very reason we just discussed.
That was a stinger.
Right.
So we've added other services like energy incentives, like that. We went back and put back the 179D, and there's another program called Section 45L. 179D is just another deduction. It's more 27.5-year property that we can now pluck out that we otherwise could not.
Interesting.
And that comes in with any energy efficiency around appliances or building envelope.
Building envelope. Interesting. So windows, insulation,
door,
things
roof,
like that.
Additional lighting systems.
Okay.
Energy management.
Well, lighting systems. That's not envelope.
No. But that's just part of. That's another. It's another component we can plug in.
Okay.
It all
so
drives.
any energy efficiency work that you do, you're able to help facilitate additional deductions.
Exactly.
Okay.
Now there has to be we have to go through the certification.
Okay.
We have to kind of compare like buildings that we have to prove that now by you spending the money to put energy efficiency into your building,
right,
that you now are either, it's like on a sliding scale from 20 to 50%. So the more that we can prove through our software modeling that we kind of have to do as a company, we can show that now your building is a green building, it's using less energy, and for that you get another bump in depreciation.
Oh wow.
And it's based on the square footage. So if you got 100,000 square feet, you got if we can qualify you for $1.80, creates another 180.
So in a multifamily asset, you would add up all the square footage.
Yeah.
Okay. Now obviously that work has to be post CapEx because you got to do it.
Correct.
Right. So that's after you've done a cost seg, I would guess, in that situation where we'd circle back to you like that Nashville asset you just did for us. Once we've got our, we've got, like, we just put in LED lighting and we're putting in lower flush toilets and things of that nature. Once that's all done, and we're putting in some new windows. So once that's all done, maybe there's some additional depreciation.
So here's the kicker, and this is I hate this provision that for multifamily, you have to have 4 stories or more to get the 179D.
Shoot.
But the 45L credits is is for 3 stories or less.
Okay.
And that's a $2,000 per unit, dollar for dollar tax credit.
I see. Okay.
And that's for heavy rehab and new construction.
And it has to be green related.
It's same type, building envelope, energy efficiency.
So if you spend
appliances.
$2,000 on things that are helping with energy efficiency, you can get a 2,000 credit per door.
Yeah. Yep, it is a residential tax credit. So
and that's called 45L?
45L.
Okay, well, definitely we need to talk about that offline for that asset we're doing right now.
Yep.
And probably the asset we have in San Antonio as well, because we just did a bunch of work there. So is there a time limit on that? Time limit on when you are able to apply for that?
They just got renewed, both of them, in the tax code, so we don't have to worry about expiring, and they actually gave it a bump. The IRS is so bad at updating us. There's still some gaps in what they want us to do and how we want us to do it.
Okay.
But as of right now, we can even go back in time and pick up. We can retro.
Oh, fantastic.
Yeah.
Okay, fantastic.
Yeah, just like we can do cost seg, how we can file, we can go back.
Oh yeah, I did a cost seg on assets I had for 10 years and saved $600,000. So and that was houses, believe it or not. That was a package of houses back in the day.
That's beautiful.
Yeah. So well, let's shift gears then. Let's shift gears to passive investing, okay? And I know you're in passively invested in about 800 doors at least. And actually, guys, if you're an accredited investor, we actually have a deal coming down the pike right now, screaming deal. But let's talk about the benefits of passive investing. So why did you invest passively?
First of all, I needed to start looking at my retirement as I start getting a little older, and I want passive income. I'm attracted to passive income. I don't have the time to go out and build a real estate company at the moment. So I looked at it like, number one, I can align myself with a seasoned operator that can kind of show me the ropes.
Right.
I can put my money into something that has so many mechanisms of appreciation, depreciation, and you preach this nonstop.
Right.
I can actually I can put my money in, and I get a paper loss every year on my K1
Right.
that eats up any profit, but I still get the profit. It's
Right.
like it goes away. It's like this phantom number. It's beautiful.
Right.
And then over time, as that, I'm in the deal. I'm an owner. I'm a part owner in the deal.
Right.
And you're in with a good operator, and all of a sudden that thing, they either refi or they sell, and you get 2x your money.
Right.
You can't do that. I realize as I'm growing my business, I'm like, wait a minute, I got way too much money sitting in the market. This is stupid.
Right.
I am so disconnected from that path, and so by coming to events like yours, by the way, thank you.
Right.
You
Sure.
opened my eyes big time. I was sitting in the third row, and I'm just,
Right.
I'm just writing stuff down. I'm like, I got to get in this business.
Right.
So you really kicked
Well,
me
good.
in the
I
butt
appreciate that.
for that. It
Good.
was a phenomenal boot camp.
Good,
man.
good, good. Thank you. By the way, guys, we do have another boot camp coming up, virtual May 6th and 7th, and I think it's still $97 to come. It's kind of a no-brainer. I don't sell anything there, so sorry if I introed that when we first opened up this episode, but crazy not to come if you're interested in this business. And let's talk about passive investing. Let me chat about it for a minute. So, all the things he just said, the tax benefits are fantastic. You work with a seasoned operator. In my case, I spend time teaching my investors what's going on behind the scenes. We have webinars and we update on a consistent basis. And so you're learning some of the stuff that I can't teach from stage. But additionally, the returns are fantastic. I mean, typically on our deals, we're at approximately a 10% cash on cash return, meaning you get 10% on your money every year. And then typically, we're over a 2% multiple on our disposition event, whether it's a refinance or a sale. Now, our preferred is to refinance and keep people in the deals. And then once you have your money and, get our investors all or most of their money back. And then, then the returns are infinity because you don't have any money in, right? And so if you are accredited, we have a deal coming down the pike right now in Louisiana. It's a screaming deal that I can't say it's confirmed yet, but it's looking really good. And so if you're accredited, text the word partner to 72345 and you'll get to our website. You can learn a little bit about us, and you can also set up a call. But we'll probably, if that deal comes to fruition, which is, like I say, it's looking good, we'll probably know within the next couple of weeks. I'm not sure when this episode airs, but check in may already be available. This deal may already be available. But anyway, just out of curiosity, the deals that you've invested in, what states are they in?
Oh, man. Well, I did. So Colorado.
Oh, that's a good state.
Michigan.
Okay.
Not so good, but
yeah,
the deal was pretty good.
Okay.
We did a couple deals in Tennessee.
Tennessee. Okay.
Yeah.
Fantastic.
So
hopefully not the west side of Tennessee.
No.
Hopefully. Okay, the east,
Yeah,
like Nashville, Knoxville, that area. Okay, good. I talk about Memphis. I got my clock cleaned in Memphis, and I don't even want to fly over Memphis airspace. And if you live in Memphis, I'm sorry, but that's just how I feel. But anyway, when you get your butt kicked somewhere, you kind of don't even want to think about it anymore. And that was my Memphis experience. But yeah, we bought an asset in Nashville, which I freaking love. That's the one you did the cost segment. Well, so let's talk about this. You're an entrepreneur. You're a shiny penny guy like me. I've built tons of businesses, and some have been a success, and many haven't. And so, where does the drive come from, brother?
Man, that's a good question, because my dad was blue collar. And I think was my drive when I look back. He grinded every day, man, and really at the end of his life didn't accumulate much, and it was just financial illiteracy is what I kind of got out of it. So I knew at an early age, I love my dad. My dad was an amazing man, but family guy. It's like that rich dad poor dad thing. Who am I going to listen to at that point? So
Right.
I did have some friends that had some successful fathers that I kind of listened to, and they were doing some single family and stuff like that. So. But I've always had that drive, man. I don't know. I guess sometimes.
What do you think the why is? What's the why? I mean, I know you've got a 20-year-old kid. If that has anything to do with it, or if it's
definitely my son,
personal?
definitely leaving a legacy, definitely not checking out of here, not doing what I know I should have done. And that
No regrets, you mean?
No regrets.
Right. Yeah.
And I have, I've kicked myself that I wish I would have got into real estate, like in probably my early 30s. I don't know if I would have been ready in my 20s because I was figuring myself out.
Right.
But man, do I kick myself.
That's a waste of energy.
It
Respectfully, that's a waste of energy.
I don't beat
mean, let me tell you something. Let me just, sorry to interrupt, but
No.
I think we're headed for the greatest transfer of wealth we've
agree.
ever seen in our freaking lifetimes.
I'm ready, baby.
I am. So me too, brother. I'm in a lot of cash, and by the way, guys, you probably heard me say it. I'm gonna say it again. It's coming. And you need to pick your freaking vehicle. If it, you can buy businesses. There's 80 million baby boomers retiring, and they have businesses. Maybe you buy businesses. You can do single family. You can do other asset classes. You can trade stocks, whatever. If it's multifamily, get your butt to my freaking boot camp. But learn your vehicle right now, because if you're trying to learn it in the thick of it, it's going to be too late. And so you want to get up to speed right away. And because I really believe that incredible opportunity is coming. And here's the thing to remember. Multifamily takes money, but it doesn't have to be your own money. And we were talking about the stock market a minute ago. I mean, I read that some serious economist that worked for one of the big houses, like Morgan Stanley, I can't remember which one it was, is predicting a 26% decline in stocks this year. Okay? That's freaking sobering. The stock market's already lost trillions in wealth for people. So, if you're in the stock market, I highly encourage you to get your butt out. That's my opinion there, but that's an opinion, but I think it's a valid one based on where we are economically. But listen, could be the greatest opportunity of your life, but you got to take action. You got to make a decision and take action and go make it happen. You agree with me?
Oh my God, 100%.
Yeah. Okay. Well, so with that in mind, are there any words of wisdom you might share with an aspiring multifamily investor, somebody that listens to this podcast? Maybe they're comfortable. We know the comfort zone is a nice, warm place. We also know nothing freaking grows there. Or maybe they've got fear or limiting beliefs about their abilities. But what would you say to that?
I mean, power of proximity is so key,
Right.
And we all have fear.
Right.
And to get to go past that fear or face that fear, get into a mastermind, get into some sort of coach.
Right.
Check out Khleif. This man.
Well, thank you, buddy.
I mean, seriously,
I appreciate that.
You pour yourself into this stuff, and you do a lot of pro bono.
Yeah, no, I do, and I really appreciate that. That wasn't my intent with that question, but I will tell you. My Warriors, I don't know if you even know this, my Warriors now own upwards of 150,000 units that we know of. It's probably more than that. We're trying to actually tally them up right now. And I've only been teaching 5 years. So I'm super freaking proud of that. And in fact, we have a Warrior event coming up for my Warriors. We'll have 300 Warriors in Sarasota here this Saturday and Sunday.
Coming up?
Yeah, coming up. Yeah. So we're doing deep dive on underwriting, things like that, just for our students, for our Warriors. A bunch of them coming in. We're getting ready for it. So this is, we're up to our eyeballs. But super proud of that. And by the way, if you're interested in the Warrior program, text the word CRUSH to 72345 to apply. And we don't take everybody, but we'll check you out. You check us out. And I promise you, even if you just have the call, you'll leave that call better than when you got on it, whether we work together or not. But very, very proud of that. Well, so let me ask you this. What is your definition of success? When you have your vision of your future, what does success look like to you? Because it's different for different people.
Yeah, it is different for everybody. For me, it's just really having that the freedom to kind of to really start to give back. It's that I'm kind of in that. I'm 55 now. I find myself giving back more and more. My charitable. I know
you're involved in charity. You support some local charities. It looks like.
Yeah. I'm actually supporting this one. Right
Aero
here.
Recovery.
This is pretty amazing.
Oh, really? Well, talk about it for a second. He's got a hat on that you may not see. It says Aero Recovery. What's that about?
This hit me hard because I was looking for something I can really plug into. So Aero Recovery is a group of Green Berets, this badass men. They come out of the military. There's a lot of suicide, obviously.
Oh yeah, I've spent a lot of time helping that, and it's veteran suicide. It's freaking horrific.
So the founder and CEO, he actually, so they've got an island out in BVI.
Okay.
And they train military folks that when they get out of the military or veterans to kind of have purpose again.
At this island in British Virgin Islands.
And they completely, and they put them, and so now then they go on missions, because these are some of the most badass men.
Oh,
they're trained at, they're
super skilled.
Super skilled. So they come out in the world and they lose their identity. So they get their identity back, then they go start doing cool missions like sex trafficking, They
wow.
go into a crane.
Helping with that. Oh, very cool.
And they rescue people out of third world countries. So
Oh,
they were
wow.
really spending a lot of time in Ukraine. Now Turkey with the hurricane.
Wow.
Or the tornor.
Right. No, actually,
or was it
earthquake.
Earthquake. Sorry.
You got
one of the three.
third natural disaster. You got it.
Big one. It's devastating. 50,000 people.
Oh, it's horrible,
So
horrible.
They're in there doing cool stuff.
Oh, that's really cool, man.
Yeah. So I'm promoting this and just trying to raise money and make
Aero Recovery. So guys, make note of that. I freaking love that, man. Yeah, and it's interesting, when someone is at the height of their game, like these special forces guys, these Green Berets. I mean, that is, that's really the pinnacle of their life up to that point. It can be like the old astronaut phenomenon where they come back from the moon. It's like, now what? In fact, I just had Mikey Taylor sitting in that chair, the skateboarding champion, super well known in skateboarding, and he had that same thing happen to him. He fell into serious depression, and so I'm sure that these guys, have the same thing, and I love that, buddy. That
it's
is
called
freaking
Healing the Heroes.
Healing the Heroes.
That's the name
Oh, very cool.
That's the name of the program.
Very, very cool. Well, do you have any book recommendations? And they don't have to just be real estate related, but any books that you really enjoy or maybe gift more than another?
One I'm on right now is Atomic Habits.
Oh, that's
by
a great
James Clear.
That's a great book.
Author. Oh my God, it's
that's good.
I thought I was doing my morning stuff okay.
Yeah.
It dials you in. It
Nice.
Time is the asset that we're trying to.
That's it.
Right.
It's the only one we have.
It's the only one. So
right.
how do you spend your day? Who are you plugged into?
Yeah.
Who do you surround yourself with? What are you putting in your head? The information is there. You just got to go out and just go grab it.
Yeah. No question. So, in your entrepreneurial career, are there any failures, notable failures that come to mind that might add value to my multifamily investors, which is entrepreneurship in certainly, and you're creating a business plan for one of these assets, just like you'd have a business plan for a business. Does anything come to mind as failure? I mean, I know you're crazy in your 20s, so that certainly comes to play.
Yeah,
but
you don't need to do this alone if you're a young entrepreneur, but it's okay to fail. My biggest character building time in my life is when I freaking failed and fell flat on my face.
Yeah.
And that's when I'm like, whoa, that's the wake up call. But just get around people. I think if you're up and coming and you reach out to successful people, you'll be surprised they want to help.
Yeah.
And they'll reach out to folks and say, hey, been following you, like what you're doing.
Yeah.
What does it take for me to buy you lunch?
Yeah.
I know a lot of people probably won't do that, but they need to do that.
Yeah.
And I think that is just so. Don't be afraid to fail, and then when you do, make sure you don't do it again, and then get around people that can coach you and help you. I think that's phenomenal. If you can do that, you will shortcut your journey.
Yeah.
Immensely.
Sure. Just and that's actually the reason I started my mastermind, because there's so many little tips that people have forgotten that I can't possibly teach them, all of them from stage, and that's the reason I started it, and it's been so incredibly valuable, and just to get around people that are further along than you are, people that think what you think is hard is easy. This is my multifamily boardroom mastermind, which isn't right for most of the people listening to the show, but something to aspire to for sure. But well, listen, Terry, this has been a lot of fun. I really appreciate you coming down here to do it in person, which is just so much better than doing it on freaking Zoom.
I wish I was number one in the seat, but I'm number two. I'll take
That's
it.
Right. That's right. Yeah, we just started this live thing, and I'm really loving it. And I want to try to do every interview I can.
So much better than Zoom.
Right. Yeah. Exactly. Well, I appreciate having you on, brother. Thanks, you
Rod.
for coming.
It's been awesome.
So one other quick thing. We encounter so many people that are frankly frustrated. They're looking in the mirror and they're frustrated that they haven't been able to escape the rat race. They haven't been able to build cash flow to the point where they're able to have financial and time freedom with their families. And maybe they see other people buying real estate and creating, incredible cash flow, and they think, well, it's just scary. Buying apartments is intimidating. And I get it. See, that's why we created our Warrior Mentorship Program. They're our coaching students, and they've had extraordinary results. My students, I've been teaching about 5 years, and own upwards of 140,000 units now that we know of, right? And we feel like it's just getting going. Now we're looking to grow this group and really take it to the next level. And honestly believe that the greatest transfer of wealth could be upon us right now with this current economic environment. Everything's going on sale. So we're looking for people who want to follow a proven framework, really like a blueprint or a map, literally step by step. And then they're able to leverage our systems and our incredible network to raise money and equity, to find deals and close those deals and build partnerships, really nationwide. So if you're interested in finding out more about how you can become more in our incredible network and take advantage of the unbelievable opportunities that are upon us, you can apply to my Warrior Mentorship Program by texting the word CRUSH to 72345, or you can go to mentorwithrod.com. And what we'll do is we'll set up a call so you can check us out and we can check you out and see if it's a fit. Now again, you can go to mentorwithrod.com or text the word CRUSH to 72345 to apply, and we will speak soon.